Hello traders, Gary Wagner here, approximately 10:30 in Honolulu, making it 4:30 in New York. It is Wednesday, the 12th day of September 2012, and this is the daily report for gold and silver. Virtually unchanged on the day in gold as we await an announcement, or report I should say, from the FOMC meeting that will be coming on tomorrow with Federal Chairman Ben Bernanke. Currently, as you can see, print 1731.51. That is the cash market. Puts it down maybe 60, 70 cents on the day. It has had a low of 1724 and a high of 1748. Now, the same cannot be said for silver. Silver is under a little bit of pressure this morning. It's currently trading down about 17 to 25 cents lower. As you can see, 33.26 current print on the screen with a low of 32.40 and a high of 34.22. So that 34.20, this long line here, is in fact a valid print on the day. So they really brought that down, as silver is truly a much thinner market than gold. The first chart that we're going to look at this morning is going to be the dollar index. Straight Henkin format. It is a weekly chart, and as you can see, the dollar is broken below 80 at this point. Of course, yesterday Moody's came out and said that without action with the government of the United States, we could in fact see the credit rating of the United States of America have that credit rating lowered. The repercussions of that are enormous, and of course that's weighing heavily on the dollar, along with the fact that we have Bernanke coming out tomorrow. Whether or not he'll announce quantitative easing, of course, only he and maybe the other Federal Reserve banking presidents and officials know. But the bet on the street, in other words, this is how the people feel because they're voting with their investments. They believe that the dollar will continue to fall, and as you can see, it is on new lows down below 80 at this point. As you can see, as of the recording of this show, we do have gold off now, maybe $1, $1.50, $2, trading at 1730, 1731 in that area. You can also see that on a daily chart, we still have pretty solid green all the way up, although you want to see larger candles. What is this showing us? Well, according to the definition of this type of Japanese candle, the Henkin candle, what it tells us is that this long spurt, this trend that we had that was really building steam over the last few days, you can see that here and here, over the last 2 days, meaning today and Tuesday, have begun to weaken. You see the emergence of the upper tails, although it is not indicative of a trend that has ended. It is absolutely indicative of a trend that in terms of strength is weakening. However, that's really a micro view or a sub-micro view. It's a daily. Now, I've gone ahead and I've converted this back into our weekly chart, and this really for longer term investments, which is what I prefer to look at, is of more significance to us. And when we look at this chart, we can clearly see, I'll go from just the bodies right now in terms of our upper resistance area. We've clearly broken above that. We know that. In terms of our lower support line, very, very much still intact. This triple bottom absolutely held. And when we look at it through the eyes of a weekly chart, the trend is still intact and the trend still has good strength. It's the last couple of days that have been weakening, so that could be an indication of things to come. And when we look at the daily, you can see that it has in fact weakened. But when we consider the weekly, we are certainly out of this sideways pattern, as you can see right here. This sideways pattern is something of the past, and I'm certainly glad to see that go. We can also see that the market has genuinely picked up steam. We talked about the first level of real resistance being at around 1750. You can see we had a high today of 1748. So we have in fact challenged unsuccessfully to take out 1750. 1750, as far as I'm concerned, is a very critical area. The two areas that we talked about yesterday and the day before were first 1750, and you can clearly see 1748 being the high. We have come and touched that. And then that next level is going to be these tops or these absolute highs right at 1800. Those are the two areas, if this market continues to go higher, we want to watch closely. Now, the fact that we're at the first of these two means that this is time to watch, because if we see this market begin to backfill, if we see it come under any kind of pressure, what that tells me is that in terms of a major count, we're still in wave 5, but we have waves 1 through 5 in our intermediate count. And to determine where wave 1 is going to end and wave 2, our corrective wave, is going to begin, is the one thing within Elliott wave that we don't really have a benchmark, because we use wave 1 for a benchmark for everything else. So to do that, I fall back on other tools. What tools? Well, straightforward trend analysis, of course, that's where we pick out these two areas. Secondly is these Henkin candles, because on the daily, they will show us when the market begins to weaken, because we'll see it go first into a small-bodied candle and then into red. Right now, though, we have to await what's going on. We have a quiet marketplace, and we know why it's quiet. We're awaiting news from the Fed chairman tomorrow. Now, also, when we look at silver, and of course, we're here looking at our weekly silver chart in Henkin format, we still have nice large candles, shows a good, strong trend. However, we have seen some initial weakening of that market, but realize, one, it is first a thinner market than gold, so you can get gyrations in the market that aren't an indication so much of a change of trend as much as positions unraveling or unfolding. When we look at the weekly chart, of course, it still shows us that this trend is intact. But, of course, this is why I started with a much shorter chart this morning. And, of course, this is the chart that I'm talking about. It is a 720-minute chart, meaning 2 candles per day. It's a half-day chart. You can see we've got the small-bodied red candle, but what I am particularly interested in is the type of candle that's forming, because at the top of the market, a candle like this is simply called a hangman. The interesting thing is it did make a low, but as it made the low, buyers did come back into the market to push it back near the high. In a hangman, color is unimportant. Also, in a single-day pattern like a hangman, it is an irrelevant candle unless it is followed by a confirming candle. Too early to tell, but if we saw a small little pullback here, wouldn't surprise me before moving higher. Long term, I think this market is headed up. Short term, well, we're very, very news sensitive, as there's a lot of fundamental data which has been emerging in the market and still forthcoming. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday after the Bernanke announcement. Bye-bye.